And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. This is the Elliott wave update for the NASDAQ 100 for Monday, May 10th, 2021. Today's update is going to be a bit longer, but I'm going to encourage everybody to please get through this with me because I need to present some what could end up being major changes to our near-term and midterm count. And so I'm just diving straight in here. Today's downside action was strong enough and intense enough that it really did not force me, but it gave me the opportunity to go back and take a look at my long-term count so that I could be more accurate on exactly what is taking place right now. And I have been talking that I was okay with this corrective phase. I was okay down to here, calling it complete. And then we rallied and then it ended. But if you remember on Sunday's update, I said, this gets left as 3 waves up unless the market can turn, gun, and break above that level. Well, it turned, but not in the right direction, and it just started to sell off. And that continued throughout the entire day and got very intense into the close. Now, what does that mean? I've gone back out to the little bit bigger picture, and I'm realizing that I needed to go beyond the daily, and I went out to the weekly, and I realized that I needed to go out beyond the weekly because what could possibly be finishing here? So in other words, when I started on the daily, I realized that, well, the only thing that this high could be besides the end of a 5th wave is the end of an intermediate 5th wave. Then I took it up another notch. Thought, well, if it's an intermediate 5th wave, what's that completing? And I went, oh, a primary 5th wave. And I thought, okay, if it's finishing that, what does that suggest? And then I had to go out to my monthly chart. And what it suggests is that I need to take another look at the very long-term count to see if indeed that level is going to mark the completion point for a cycle level 3rd wave. Now, that cycle level 3rd wave began in late 2008, early 2009. So this has been in progress for 12 years. So that's why I want to spend a little bit of time with this, because it's not one of those where you immediately jump and you just start selling everything, unless that really fits what you need to do. But I'm a day trader. Hopefully people are checking because you're day traders. That suggests we really need to just take a look at that so that we can get a conceptual mind around what could possibly be getting started. Now I'm going to come back to my hourly chart. In fact, I think I'll go to the 4-hour chart because I won't be having to switch back and forth. What really has taken place is that kind of came down, and I'll tell you from right now that it's closing at 13,311.50. If we're going to continue to count that as a 4th wave, which is what we were doing, it cannot drop below 13,287.25. Well, okay, that's 24 points from here. And I'm going to keep an eye on this market to see, come on, get all the way over, right there, the NASDAQ, to see where that starts to bid offer as we come up to the start of Globex. Because if it drops and it breaks, even by a point, it truly can't break and close below that 13,287. Come on. She's so fussy. In any case, if it does, then what does that portend? That portends that there can't be a 4th wave. So then I have to start backing up. Now I can go back down to the hourly. I have to start backing up my count to go like, well, if that can't be a 4, then I have to move the 4 to here. Then what does that make this? It has to be the 5. And if that's the 5, it's a 5th wave completing of what? Then I need to go up 1. Well, that would be an intermediate wave 5. And if that's a 5th wave completing it, then what is it? So I have to go up further. Then it's completing a primary fifth wave. And you have to keep going up until you get to the top level, which is that cycle level. So that's a long-term rally that we would be concluding at that level. What does that suggest? That suggests that we're entering into the cycle wave 4 correction. Instead of those smaller fourth waves that we were talking about, it has now skipped all the way. And now we're in the beginning stages of a cycle level fourth wave. I'm not making that call just now. The market's going to continue to tell us. But if I don't reveal it as an alternate count, which has always been there, so that's a long-term alternate count. And what I now need to do is to allow the market to continue to tell me what its intentions are and where is it going. If indeed it is that cycle level, I'm going to pull this out to the monthly. Then these are the levels that we're looking at that it can come to: 0.236, 0.382, 0.5, 0.618, 0.75, 0.70, 0.5. The more common are right here. This is a cycle level. So what do we think? Well, it's going to come into the area of the previous fourth wave of one lesser degree. That's the primary. So that zone is right here. So if you've been following me a little bit, you know that I've been discussing that we're towards the end of the move. Whether we turn from here and go up to 14,200 is not going to change the fact that the next move down is going to end up here, because what that ends all the way up there is going to be completing will be still that cycle wave 3. So we've got a lot going, but now I have to allow the market to tell me. So then I go back to these charts. Okay, so we can see where we're going to open on our hourly. We have an idea that we might open here. If I had to put a count on this, and we're in this first wave A, first of intermediate degree, and then we can break it down further into what degree we're in. But let's just say an intermediate degree wave A. Is it going to take an ABC structure, or is it taking 5 waves down structure? Those are the two choices that we have for wave A. Well, this to me counts as 5. This is clearly a 3. This is 1, 2, 3. We get a little bit of a rally and another pop down. That would put the 5 in. That could be wave 3 or 1 of 3. The intensity of the move tells us, I mean, or the not only the intensity, but the size of the move tells us, A, don't be counting too fast. For all we know, these are minute waves within a minor wave, within the intermediate wave, within the primary, et cetera, et cetera. So if we got to bring it all the way down, then this is going to subdivide many times. And we're going to definitely drop below 13,000 before all is said and done. Now, tomorrow, what can we expect? The way that the moving averages are lined up, right now, they're continuing to be lined up to go down. The 200, the 50s above the 200, the 200 is above the 50. So in other words, the 50 is below the 200, the 20 is below the 50, the 4 and the 8 are below the 20. That's lined up on the hourly to continue to go down. I can move this all the way down to the 5-minute chart, and it's telling me the same thing. Everything is lined up to go down. So that tells me we're not likely done with the downside. Stranger things have happened, but my feeling is that we continue to drop. And so I put some internal Fibonacci's, right? Because we're just trying to determine what are our limitations for tomorrow. Well, if this is indeed a third, it compares and it goes with the fifth, it goes with the first wave. So I can draw my Fibonacci extensions that are going to give me a clue as to what this wave 3, if indeed that's what it is, can do. So what we have is, okay, we don't suspect that it's going to stop at 618 or any of these. Where the first level I think it would stop is that wave 3 is going to be equal to wave 1, and that would be a bare butt minimum at 13,135. That's not where I expect this thing to stop. I expect this thing to come down all the way down to here or further, if indeed it is in a third wave, and it's going to subdivide several times. So initially tomorrow, we know that it really cannot break below what I said before was 12,887, I believe. So we're back to that 887 number. If it falls below that, then indeed this count goes into place, because it can't be a wave 1. It can't overlap wave 4, cannot overlap wave 1. So it can't be a fourth wave. So therefore I got to take it up. So that's really what will put the cake, the icing on the cake. So I'm initially thinking that's where it's going to go. We may get a little bounce. We might get the bounce overnight. If it begins to break above these moving averages and they turn and start heading higher, and this again gets itself up in these upper reaches of this level, then again, it's something different. So we have to continue to allow the market to tell us what its intentions are and really where it's going to go. We can draw the Fibonacci. We can make our estimates based on the pattern thus far, but the market's going to tell you what. And so we're going to now put limitations. If it breaks back up, trade what's in front of you, and we'll take another look. And we'll look, because this again would leave 3 waves down, A, B, C, and a very short C wave at that. So a lot going on. Upside parameters, we trade what's in front of us, and we watch to see if it breaks up these same zones, which would tell us that, okay, it's going to go higher. For whatever reason, it's going to go higher. If it holds this without breaking below 12,887 and starts to go up and blast above it, okay, previous is back online. We have to be ready for whatever the market wants to toss out to us. We can't say, oh no, that'll never happen. That's like saying it's never going to go down. Both are going to happen, and we can follow the sequences and we can put things together. We just need to play and trade what's in front of us so that we live to be here tomorrow and make the money. You know, when this thing broke 13,600 within the first hour, that told me, boom, that's off. And if you remember, I spoke about that in the update. I said, if it breaks below 13,600, you know, all bets are off in terms of that it's going to swing and go up, because that tells me it was not swinging and going up with volume. It was swinging and going down with volume and intensity. That sets the tone. And you trade what's in front of you, and you use your moving averages, and then you start to draw Fibonacci's to where else this thing could go. And that's pretty much what I did, because whatever you may have lost playing it from the long side here, you more than tripled by flipping and then beginning to trade from the short side, because that's what the market told you to do. That's what the moving averages told you to do. And that's what you do. Was it easy? Not necessarily, because there were intermittent rallies in here within these hours that were very tradable to both sides. But the overall trend based on the hourly was down. So it begins to tell you you're going to want to scalp longs and position shorts and work them. So tomorrow, I really do suspect that we'll continue to move down as this third wave unfolds. And then we will be able to piece it into the building blocks that are telling us what larger picture is happening and what we can expect over the next week, over the next month, etc. And we're getting a little bit oversold down here. That's why I think we'll just kind of come down easy. Or if they can relieve this overnight and they rally it up, and then we come in and it's got enough room, then again, we'll look for the downside to continue. Either direction, either way, Ultimately, I am looking for the trend to the downside to remain in force. And that also includes bounces are going to happen. And sometimes the deeper we go and the harder we fall, the quicker that bounce is going to be. So again, watch your moving averages, watch your Fibonacci, watch the pattern. The pattern's going to tell you, if you're on your shorter term charts and you've got a pattern that's telling you, oh, we've completed 5 down. You can fit that into your larger building block. Just look at, you've done 5 down, you're going to do 3 up. And that is going to help you how you're going to want to trade it, and what you're going to work in terms of having to sell one at a higher level, then it pulls back, you buy another one in, et cetera, et cetera. You're going to be able to determine how you're going to trade it. That would be a minimum, 13,135. I do think ultimately this move, this decline, which started up here, will get below 13,000 before it's complete. Ultimately, like I said, 12,713. And in the larger scheme of things, if this indeed completed all of what I talked about, all the way up to that cycle level 3, it is not going to stop. It just is. That's a resting point. We get a bounce. It could be a decent bounce. It could be tradable bounce. It's myriad of things, but the trend would definitely be down on that longer term basis. More to come on all of this. I have not put the 5 and the 5 and 3 all up here. I'm holding off. I'm going to let this market nail it for me, and then I'm going to put it up there. I don't want to jump the gun. So that's our marching orders for tomorrow. That's what I think. Please have a good trading day. Pay attention to your moving averages. Trade what's in front of you, and just stay calm and enjoy the ride.